Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options coming to you with the morning market preparation video for April 19th, 2018. So yesterday we had kind of a little rest, and I know when you look at a market like this, it seems, my goodness, this little tiny range, it's boring. And after, about a month of just absolute whip, overnight reversals, everything going on, this seems pretty darn boring. But let's talk about that for just a second. First, it would be very, very healthy for the market, in my opinion, to just rest above that 50-day moving average. Allow these lower moving averages to start moving up, giving us a little bit of base to be able to work from, holding above this downtrend line and testing it as support right in this area. This would be a great place for a little consolidation. And I know consolidations seem boring, but I want you to consider a couple things. When we're in a consolidating market and it seems like, the indexes are all of a sudden just not moving a ton, keep in mind that it's consolidations that actually provide us great support and resistance levels to be able to trade around. If an index is consolidating, it often sets up great trades. Now let's keep in mind, remember back over here, let me go back here. Remember back over here when we had these long consolidations and how productive that was for the market. Notice how the price action over here was deliberate, consistent. That's what typically happens after a consolidation or even during a consolidation for individual stocks. When an index is consolidating and we're avoiding all of this crazy whip, good stocks that are already trending either up or down have these consistent price moves, deliberate price action that follows along with that, because the market is calmer. The market is not nervous about waking up tomorrow and seeing all of their profits being wiped out in one fell swoop. So remember that a little bit of calm can set up really great trades. Now, it would be odd and actually fairly rare to see a long consolidation during earnings. I'm not saying it's not possible. I'm just saying it would be rather rare to see that happen during earnings season. However, a little bit of calm, even a day or two of calm, does a lot of healing in a market and provides that little bit of respite that gives us an opportunity to set up new levels, set up new trades, and build a little confidence back into the market that we're going to have a little bit more stability, so we could see more traders getting involved in this market with just that little bit of rest. So taking a look at that, we've got a great situation here with the Dow taking a little bit of a break after rising above that 50-day moving average. If I were to take all the price off of here, I want you to take note of this, that we are starting to build what is commonly called a moving average squeeze. Moving averages are all coming together. Notice that 50-day moving average is finally getting the opportunity to turn flat and maybe start to turn up. That provides a nice level of support here for the market. So even though yesterday and today, or the last couple of days have seemed just a little bit boring, please keep in mind that gives these averages to set up potential levels of support that hold if we do happen to have some bad news or something and get attacked down here. Gives a little bit of stability to the market to hold on. So kind of keep that in mind. A little bit of boring sometimes goes a long way to improving the market. Let's take a look at the SPY. The old SPY moving up yesterday, managing to hold a positive move yesterday, but just barely, as it also kind of rests. And we're holding above that 50-day moving average. Notice those averages here as well, starting to turn, hopefully showing us some positiveness here as they squeeze together and give us that nice point of potential support. Let's take a look at the Qs. The Qs have been quite strong, maintaining that move up, that momentum move up. Looking very, very good here on the Qs. Again, above that 50-day moving average. Notice that that 50-day moving average is flattening out, starting to turn up, and also providing that little bit of a squeeze point right here that could provide us some support. That is an awesome thing to see. We haven't seen that for a while. And also IWM, which has been remarkably strong, rallying up here toward these high levels of resistance. And yesterday putting in a bit of a shooting star pattern here, suggesting that we may be just a little bit overbaked here in the short term for the market. Now, currently futures are pointing to just a very slightly lower open this morning. If we go back here to the diamonds, you can see just a slightly lower open. Nothing major here at this point. Which is actually a little bit surprising to see such calmness in the face of lots of earnings events, but that seems to be the case this morning, and actually rather nice, as long as we don't open the door for those bears, because the last thing we want to see here, this is my opinion, of course, but the last thing we want to see here is those bears regain control and break us back down below those levels of support. If they do, if they break us back down, we can probably expect another leg lower. And I would really not want to see that occur, and I don't think most people would. I'd love to see us hold right in this area, get a little bit of rest, build a little platform where we can work from to move this market higher. So right in here, just a little bit of rest, just a few days. Now, keep in mind, we're heading in toward a weekend. It wouldn't be at all a surprise to see folks starting to take some profits as we head into the weekend. Let's take a quick look at the VIX here. VIX dropping below. First, we look like we were going to rally good yesterday on the VIX here. A little bit of fear coming in the market. But we ended up closing the day below this level of support. I think that's a good thing. I would really like to see the VIX continue to pull on back toward this 200-day moving average. That would be nice, and really maintaining this little downtrend that's going on would be a great thing for us right now. Just to have the jitters, the nerves of the market calm just a little bit. Let's take a look at T2122. T2122, the 4-week new high, new low ratio. And you can see in here that we're up here at that bearish reversal zone. We're up here where we just need that little bit of rest or calming. Now, we can just consolidate here. And in a consolidation, this will often pull back. But even a little pullback, as long as it doesn't get severe and really crack through heavily through those moving averages and that support level, we should be okay. So don't get too concerned if we do see some selling coming into the market, unless we start giving up those 50-day moving averages and really start cracking lower, opening the door for those bears. On the earnings calendar today, we have a lot going on. That earnings calendar, we have about 100 companies reporting, and if you're hearing that on my phone, my CNBC app on my phone keeps going off as they continue to announce earnings reports that are coming out. Make sure next week we really get heavily into earnings. Make sure you're checking earnings dates on every company you're holding, every company you're thinking of buying. Be careful not to get caught in an earnings event unaware. Those surprises can be very painful lessons that you don't want to do that. You want to have a plan around your earnings, anything that you hold. On the economic calendar today, we have quite a bit on the calendar today, but only a couple things that really can move the market. Jobless claims here this morning, they're expecting that to remain strong and even decline a little bit today, according to consensus. And the Philly Fed survey is also expected to pull back just ever so slightly, but it's still hovering around 50-year highs. Very, very strong on the labor side of things. In the market. We have 3 Fed speakers today. We have a bunch of bond announcements, and there's several other reports such as the Comfort Index, leading indicators, natural gas report, Fed balance sheet, money supply, those kind of things coming out today. But really the only thing that we have to worry about moving the market much happens first thing this morning, along with those earnings. So everyone, I want to wish you all a fantastic day. And if this is the first time you've seen this information, please do me a favor. Click that subscribe button on YouTube and the follow me button on Facebook. Crush those thumbs up buttons. That helps me a bunch in having these videos shown to more folks. Also, always feel free to share this video with any friends and family that you might think could benefit from this market preparation video. And please always feel free to drop a comment. I really do appreciate that. You guys have been fantastic about doing that, and I really do appreciate it. Traders that work together, traders that help each other, tend to progress much faster and much farther in the market. So become part of the team. Work with us here. Participate, and we'll all improve as traders. Everyone have an awesome day. I wish you all great profits, and we'll talk to you all very soon, bright and early Friday morning. Take care now.